Good morning, hunters. Welcome back to the Daily Hunt for Multibaggers on this Thursday, January 22nd, 2026. We've got a really interesting batch of insights for you today, fresh off the wire from yesterday's market data.
That's right, Ethan. Our AI dug through a significant number of posts, flagging quite a diverse range of stocks. What's clear is we're seeing some wildly varying sentiment out there, a real mix of high optimism clashing with some serious red flags, especially when we look at the underlying financial health. It's shaping up to be a day with both promising candidates and some serious caution signs.
Absolutely, Brooke. Let's dive right into our first one, Strategy Inc., ticker MSTR. Now, we've seen a lot of discussions around this one lately. One user was pretty bullish, highlighting a huge new BTC buy and suggesting that in an MANAV below 1.0, it's a steal. That kind of bold move, linking directly to Bitcoin's potential, really catches my eye for growth.
Well, Ethan, while I appreciate the enthusiasm for Bitcoin exposure, our AI-generated insights on MSTR paint a pretty stark picture. This stock has consistently been rated stay away in our market commentary, and today's analysis doesn't change that. We're seeing persistent concerns about stock dilution, with users pointing out they're issuing shares to buy Bitcoin, which just spreads out existing Bitcoin across more shares.
But surely, with Bitcoin's potential, any increase in their holdings is a positive, right?
Not necessarily for equity holders in this case. The KPIs highlight a massive historical decline. It's plummeted from around $384 a year ago to just over $160, and it's trading very close to its 52-week low. Then there's the debt-to-equity ratio, coming in at a whopping 14.147, which signals significant financial risk. Combined with a beta of 3.433, this isn't just volatile, it's extremely volatile. The latest news even shows the stock dropping after a leveraged Bitcoin buy. So for MSTR, our analysis firmly classifies it as a stay away.
All right, noted on MSTR. Next up, let's talk about Micron Technology Inc., ticker MU. We've had a lot of chatter, and it's a bit of a mixed bag, to be honest. On one hand, we've seen users celebrating leap gains and expressing strong optimism, even predicting the stock could double from here. The CEO, Sanjay Mehrotra, also anticipates demand for memory will keep lifting Micron stock for years to come. To me, that sounds like a company with incredible growth potential, especially with surging memory chip prices. This has often been a buy in our past market commentary.
It certainly has, Ethan. And the strong insider buying with over 32.
They have the potential to improve future revenue and profitability, yes, but we're talking about an early-stage mining company with massive debt and no current profits. The execution risk for these ambitious projects is incredibly high. For CRML, our analysis, despite the bullish community sentiment and exciting news, suggests a stay away due to its severe financial weaknesses.
Moving on, let's consider Intel Corporation, INTC. This one often pops up. The buzz around it is intense, especially with earnings reports. The stock's been rocketing higher ahead of earnings, suggesting a lot of optimism, even hitting near its 52-week high.
Well, Ethan, this is a perfect example of market sentiment getting ahead of itself. The prevailing user sentiment is actually quite bearish, with comments like the second coming of Jesus is priced into these earnings, clearly implying unrealistic expectations. Our market commentary on Intel has consistently been stay away, and today is no different. The KPIs are stark, an astronomical PE ratio of 904.16. Yes, you heard that right, 904. Its EPS is a mere 0.06, and its net profit margin is an incredibly thin 0.37%.
Wow, that's quite a PE. But what about the recent rally?
The rally seems purely speculative ahead of the upcoming earnings, which are today, January 22nd. And here's the kicker. Even analyst price targets are significantly below the current price, with Jefferies at $45 and Bernstein at $36, compared to Intel's current price of over $54. A negative return on assets of negative 0.00463 also confirms it's not generating profit from its assets. If those sky-high expectations aren't met, there's significant downside. For INTC, our AI-generated insights firmly recommend a stay away.
That's a strong warning, Brooke. Next, we have Western Digital Corporation, WDC. Now, this is one where the community is showing some serious conviction. One user threw down a $75,000 WDC YOLO, indicating a high-confidence bullish bet. The news also supports this, with analysts like BNP Paribas Exane raising price targets to $250, citing AI storage optimism, and reporting that shares are skyrocketing. This stock has never been featured in our market commentary before, so it's a new entry.
That AI storage optimism is certainly a powerful catalyst, Ethan, and the financial KPIs generally support the bullish sentiment. WDC is trading very close to its 52-week high, having jumped from around $50 to nearly $245 in the last year. Profitability metrics are robust, with a net profit margin around 25% and an EPS of $7.11. Critically, we're seeing strong insider buying, with over 4.75% net shares purchased by insiders. That's a solid vote of confidence.
So, despite the high PE of 34 and P/B of 14, those insider buys and AI tailwinds are strong enough?
They are. While those valuations suggest high expectations are priced in, the AI storage optimism and solid insider activity provide a strong rationale for sustained growth. Western Digital presents a compelling case. Our market commentary on WDC is a buy.
Fantastic. Last but not least, let's talk about Algorithm Holdings Inc., RIME. We've seen a lot of discussion about their strategic shift to AI logistics and their semicab platform. There's news of major contract expansions with giants like Unilever and Apollo Tires, and semicab exiting 2025 with a record $10 million annual revenue run rate. To me, this shows a company that's found its stride and is successfully transforming. This one has consistently been a stay away in our previous market commentary, but these developments could be a game changer. Ethan, while the news on semicab's operational growth and contract expansions is indeed positive, showing genuine business development, the financial reality for RIME is absolutely dire, and it's why it's remained a stay away in our market commentary. Our AI-generated insights consistently highlight an astronomical debt-to-equity ratio of 6,811.0. That's not a typo, 6,811. The company is deeply unprofitable, with a net profit margin of negative 1.08% and an EPS of negative $278.31. Its operating margin is negative 89%. But with such strong revenue growth reported for semicab, couldn't that translate to profitability soon? The revenue growth for semicab is positive at 12.732%, but it's clearly not offsetting the massive losses. The stock itself has plummeted over 90% from its 52-week high of $8 to its current price of $0.79. While there's talk of a reset band at this low price, the fundamental financial hole is simply too deep. The operational wins are not yet translating into a healthy balance sheet. For RIME, it remains a clear stay away. All right, hunters, that brings us to our roundup of today's candidates. Here's your compiled list for deeper analysis. Investigate as buy, Western Digital Corporation, WDC. Investigate as cautious buy, Micron Technology Inc., MU. Investigate as speculative gamble, Algorithm Holdings Inc., RIME. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Indeed. Thanks for joining us on the Daily Hunt, everyone. We'll be back tomorrow with more AI-generated market commentary. Until then, happy hunting.